2022 has been what can only be described as an interesting year for us traders. There have been opportunities, but also there have been all sorts of markets which have gone in totally the wrong direction for our positioning. And we're talking now to one IG client and independent trader, Michael Taylor, who joins us now with some more about what we're doing in terms of where we're positioning ourselves in the market. First of all, welcome back, because it's been a long time since we spoke.
Lots has happened
pre-COVID.
Yeah.
I want to talk to you a bit about COVID actually, and talk a little bit about, as a trader, how you positioned yourself. It came out of nowhere, so
yeah.
It was one of the. Would you describe it as a black swan event?
Yeah, definitely. It was quite scary. For me, I didn't really do as well as I could have done.
Hindsight's a great thing.
Well, it is, yeah. I mean, you should see my hindsight portfolio. It's up 10,000% this year, but not my real one, sadly.
Yeah.
But yeah, at the time, I'm pretty sure I remember being at a lunch in December. That would have been 2019. Yeah. And people were talking about COVID in China, and nobody really cared. Yeah. And I can remember a friend told me he met a hedge fund guy who was sweating bullets because he'd gone, all in short in December,
right,
and was already massively offside on the trade then. Don't know if he ever held it through to February, right. Because obviously January the market just rallied. Yeah. And I remember even when it was sweeping through Italy, and we had these videos on Twitter of people saying this is going to come. People were still flying in airplanes and everything. Mm-hmm. And the markets were just going, higher. So I just assumed the market's efficient. All these people much smarter than me, got much bigger machinery than me to compute things, obviously know better. Mm. Therefore, if I go short, it's probably a losing trade. So, I actually talked myself out of a trade, because if it was nothing, the market was expecting it to be nothing, so I wouldn't really have lost that much. But obviously, if I'd have been right, and the markets did tank, yeah, then I could have done quite well. But as the market did tank, you start to think, well, it might actually bounce. So yeah, I don't really want to short it here, because it might bounce and then I'll lose again. Yeah. But I did eventually start shorting things, because some stocks just had no bid. Yeah, and you would short them, and they would fall, and no one was bidding for anything. There'd be like loads of things on the offer, and the bid would be like 20-30p down on like 200p stock. You could drive a truck through the spread.
But of course, at that time we were all locked down. And of course, us traders, were much more in front of our screens, I suppose, to a point.
Yeah.
So we were reading things on a minute-by-minute basis, and I think that always gives a bit of a false impression anyway. I don't know what your thoughts are. I mean, you're at it far more than I am, because you make your living out of it. But then came this bottom, very quick snap bottom. It looked like one of these sort of, what do the technical traders call it? It's sort of exhaustion trade, isn't it? It's right at the very bottom. And then all of a sudden, it snapped back. I mean, that must have caught you.
It did, yeah. So I remember being short 20, 30 stocks. So I'd started shorting way too late, but I'd been quite aggressive in shorting them down. And then the lockdown was announced, and that was the bottom. I ended up covering things, but I didn't go long, because I thought, it's lockdown, obviously. How's anyone going to make any money at all?
And then, of course, came all the money coming in from central banks and governments and so forth to try and support the markets.
The helicopter money.
That's right.
So I did get long eventually, but quite late. But, as we saw with 2021 and 2020, it was just a one-way street from.
So what did you learn from this? I mean, is there something to take away from this? Let's hope it never happens again. Because,
let's hope not, yeah.
We don't really want to go through all that again. Was there a message, do you think, that for young traders coming into the market now, is there something you would say, this happened, this is how we dealt with it, this is a lesson that was learned?
I think one thing I would say is that markets are not efficient, and this is something I've believed ever since I've been a trader, especially in small caps. They're not efficient, because you don't have, for example, with Vodafone, you might have teams of suits from Barclays, Jefferies, looking at every little cash flow, and that stock will be pretty efficiently priced. But with small caps, it'll be people like me back bedroom punters, you don't really get institutions or smart money in things sub 100. I mean, there are,
Yeah.
but it's never really efficiently priced, and that can be the opportunity. So, for example, one trade that I will often see is post-earnings announcement drift.
Mm-hmm.
You know, stock announces good news. If the market was efficient, it would uncross and then not move for the rest of the day. But of course, it uncrosses and then carries on going. Not always, because nothing's ever guaranteed. But because the market's not efficient, we get things like that happen. You know, if the market was efficient, it wouldn't be a thing.
So you're taking advantage of that opportunity, is that what you're saying?
Yeah, so when I was talking about going short, you know, even at the highest level of FTSE 100 and everything, sometimes things just aren't priced efficiently. That was a big wake-up call for me. And I'm not a smart guy, I'm not a macro guy, but sometimes you can spot good risk to reward trades. And you might even want to talk yourself out of them, but maybe just put it on. And you might be wrong, you might be right, but you'll probably learn something doing it.
The other thing is, I'm talking to you about your strategy. I mean, you give the impression you're just a standalone guy doing your own thing, but that's not the case, is it? You have a group of friends, don't you, that you concur with? Is that right? You drill down in terms of some of the reports?
Yeah, so I've got a network of people that will bounce ideas off and things like that. So you're not really fully alone unless you want to be. I mean, all of my friends tend to trade differently from how I trade, but sometimes they might see something that they like and, you know, they'll pass it my way, I'll do the same. I mean, some of my best trades have actually come from other people telling me about them, so you never really know. I think it's good to talk to people. Don't blindly follow people on Twitter or social media. Cause,
good old social media.
I mean, even me, I get plenty of things wrong. So you shouldn't ever follow anyone blindly, but look at what they post. You know, does the trade make sense? Have they missed out any of the risks? One thing that you do see is, you know, if I'm long something, I don't mind people poking holes at it because I want to know the real risks. But some people, they'll sort of put their head in the sand and they won't want to hear any downside, and that really is dangerous because they've got one view and they're not looking at any of the potential risks, which is sad, but it's something that new traders do quite a lot.
Yeah. Let's wind the clock forward and take a look in some more detail about what happened last year. As I said at the top, it was a bit of a difficult year for some people. It's easy to get the wrong side of a trade. How did you fare? What was the strategy you followed that gave you the opportunity to continue to be in the market?
So 2022, you know, I think everyone was max long in December 2021, so you know the first couple of months were pretty easy. I did make some dumb mistakes, you know, I am human. I was too big in some stocks that were just too difficult to sell, so I took big markdowns on those. Didn't short aggressively as I should have, so there were some stocks which I felt were quite obvious would take some pain. So for example, Gym Group, because you know people are getting their pockets squeezed, they're going to go through everything and they're going to look where they can save money. And when I actually looked through the annual report, it was a large amount of people were not even going once a week, and that's a very easy money saver for a lot of people. And just the sentiment, but I didn't actually make any money on that stock, even though I actually got the trade right. I think I got stopped out of it, never put it back on, and then you know you look a few months later and it's dumped 50%.
Well, I want to say one thing, and we might talk about stocks in this interview, but I know that you're not recommending any of these.
No, I'm certainly not recommending.
I don't want to drill down into your positions, particularly on individual stocks. Just remind us, are you a day trader? Do you stop out at the end? Do you finish your trade at the end of every day, or do you hold over for periods, maybe over a weekend or whatever? What's your strategy in that regard? So
I do both. So I will intraday trade. So for example, this morning EasyJet had good news. And even then that post-earnings announcement drift happened today, so it gapped up and it did move higher. But sometimes the better trade is to go for the read across. So if we imagine EasyJet has good news, it's not so difficult to imagine Jet2, Wizz Air, might have an uplift as well because people are making the assumption they're doing well as well. And that actually happened. Jet2 and Wizz Air, they didn't even gap up and they rallied. Unfortunately, I caught neither because I was busy elsewhere.
Right.
But I do intraday trade, and some trades I hold for weeks, months, even years. Very rare I'll hold them for years. But yeah,
and you specialise in small caps, don't you? Do you veer into other markets? I know we're talking to some clients that just do FX or they just do commodities. Are you just small caps, or do you veer into
UK stocks? So intraday,
right.
I will trade the larger stuff because you can't intraday trade small stuff because you've got a 10% spread.
Yeah.
If you buy in, you've sort of committing yourself, whereas EasyJet, you can get out pretty quickly and easily. But yeah, UK stocks generally, FX I think is very difficult to make money from if people are successful doing that. I have a lot of respect for them because that is tough. Commodities, I tend to leave that alone. What I will do is if a commodity is performing really well, can I find a stock to play that trade? And the correlation is never going to be perfect, right? But if gold is going up and you have a view that it will continue to go up, you want to find an undervalued stock that will likely benefit from that tailwind. So it's not commodity trading, but I might take a view on a commodity and play it through a stock.
So here we are now in 2023, almost at the end of January, can you believe it?
Yeah, it's going to be Christmas again. So.
Don't start that one. Listen, 2023, anything sort of pearls of wisdom you think it's worth mentioning to other IG clients? Because we're in an environment at the moment where we've got central banks, they've clearly still got their foot on the pedal. We heard today some news coming through from Australia, for example, where trimmed mean CPI coming in stronger than expected. We're now expecting the RBA to be more aggressive. We still don't know for a fact the Fed's slowing down. The Fed has said they're going to continue to raise interest rates. We know the ECB still got its foot on the pedal. We've got no indication that inflation is really stopping here in the UK. So I imagine that the central bank, does that concern you? I mean, how do you play the inflation or the central bank activity? Or is it just a question of doing the long-short dance with different stocks?
Yeah, so for me, macro, it's sort of above my pay grade. I don't look at the granular stuff. I tend to look at the view and the risk to reward in that. So, coming back to 2022, we had a euphoric bull market and things were very clearly going to go wrong, which was why I started putting on more shorts and getting short and playing it that way. I go through a couple of hundred charts a weekend with filters, and quite a lot of them seem to have bottomed in October, November. So I don't know for sure, and nobody ever does because they don't have crystal balls, but I get the feeling that the market maybe has bottomed and we're sort of starting to move into a new bull market. Hard to say, but what I've found is the easy money going short has gone. Valuations have shrank. You're not really finding garbage trading at 50 times earnings anymore, whereas people were quite happy to bid all of those up. That is now gone. So it's quite difficult now to make money going short unless you find like a really good opportunity, whereas before shorting was quite easy. Yeah. It's not anymore. I think really I want to be looking to go long.
That's an interesting point. I was going to ask you the question whether or not you think we're going to visit the COVID lows. Clearly not then. I mean, I know you don't trade indices, you trade individual stocks, but some people still feel we've got to get a new bottom in before we start to make an aggressive upside. But you don't think that's the case?
Who knows? I don't know. I just look at charts and what I'm seeing is that things are quite happily going up. So I will just play the charts, and if we hit new lows, I guess stocks will print new lows, and that'll be the sort of key to close positions and look to go short. But there are pockets of value appearing. So who really knows? It's sort of hard. And if you get wedded to that view that we must see lows, then it's sort of hard. You get those blinkers on. You don't want to accept new information. You know, I can change my opinion tomorrow. If stocks start to fall, I'll think, okay, well, I was wrong.
Yeah.
Maybe I need to close all positions.
That was the point, actually. I was going to mention at the end of the interview to say that it could all change tomorrow.
Yeah, exactly.
That's the thing
yeah,
about
I mean,
this
what I'm saying now could be out of date tomorrow. Yeah. Which is why you've got to constantly look at new information and update your prior assumptions.
Yeah. Do you have any time off? I mean, you must be constantly wedded to your phone on the app
Yeah.
to try and make sure you're the right side of the trade. I mean, we all have holidays when you have downtime. Are you still at it?
Quite a lot of the time, yeah. My wife really doesn't like it. With the intraday stuff, you know, I won't trade intraday as much on holiday, you know, unless I think there's a really good trade. But I will get up to read the RNSs.
Yeah.
So whenever we're in the US, you know, my alarm will go off at like 1 in the morning. I go down to the hotel lobby.
It's really good for married life, isn't it?
Yeah, not so good, but you know, if I have a large holding and there's a profit warning,
exactly.
I need to get out. I don't want to wake up and find that, you know, the stock's 50% down and I could have been selling at 20, 30, 40. So it's really, I can't afford to not do it, if that makes sense. But you know, the full-time trader, there's advantages, there's disadvantages. You know, one of the advantages is I can sit here talking to you and hopefully I'm not losing too much money.
I bet you're on your phone as soon as you finish.
I will be checking it, yeah.
Michael, look, we've got to leave it there, but thanks indeed for joining us. It's a pleasure.
Thank you, Jeremy.
For you
Thanks
to walk us through the life of a trader here at IG. That's Michael Taylor. He's an IG client and someone that's very active in the market, especially small caps.